Welcome to FinMet Mondays, the number one podcast for all things gold.
A very good morning and welcome, Sunil. Thanks again for joining the podcast. Um, Gold is very delicately poised now, having fallen through what looked like a very critical price level, near 1680. Uh, I think that in 2022, Sunil, the metal has, I think, fallen 20% below the all-time high of, I think, 2065. For some reason, the critical support of 1680 broke, and probably you can throw some light on what led it to actually break through this critical support level.
I think the weakness we're seeing is really a combination of two factors. One is, of course, the stronger dollar. The dollar against most currencies has reached um, several multi-year highs. For example, against the British pound, it hit the highest level since 1985. So that's sort of an idea of what's happening with the dollar and how it's impacting currencies. And to that extent, I think gold in dollar terms has become weaker because of that. But also, I think what we saw last week was um, a sharp increase in long-term interest rates. And what's happening with that is that the opportunity cost for holding gold has become much higher than it was, let's say, even 6 months ago. And so the fact that you can get 4 or 5% interest on your dollars, long-term dollars now, means that the investors have started shifting away from gold and getting into more interest-bearing instruments, and so that's impacted the decline in gold also.
And what do you think this means for the prices this week? We've seen that market participants have already felt like, yeah, the Fed is going to raise interest rates by 75 basis points, so they've already positioned themselves accordingly. In what situations or what circumstances do you think there could be more follow through selling pressure and we could see gold fall through even more?
Yeah, I think normally we should see, once the Fed announcement is out of the way, we should see gold consolidate again because, again, people sell the rumors and buy the fact. But the one situation that could make gold really go down is if, let's say, the Fed increases by 100 basis points instead of 75 basis points. The inflation data recently has been much stronger than people expected. And so there is a probability, I think about a 20% probability that they may raise by 100 basis points. If that happens, I think we'll see gold become considerably weaker.
Thanks, Sunil. I think this is going to be a fantastic week for in terms of action, in terms of a lot of things that are going to happen. So let's see how it plays out, and see you next Monday.
Thank you, Sean.